You think you control your money. You don't. Every swipe, every deposit, every transfer is being quietly shaped, not by your choices, but by the bank, and not in the way you think. This isn't about fees or interest rates. This is about influence, leverage, and control that most people never notice until it's too late. It starts with something you never see: your bank's balance sheet. Most of us imagine banks as warehouses for money, holding your cash safely. The truth is far stranger. Your money doesn't sit there. It gets lent out, over and over again. Fractional reserve banking. For every $100 you deposit, your bank keeps maybe 10 and lends 90. That money gets spent, deposited again, lent again. You're essentially funding the decisions of strangers. Now you might say, but I can withdraw my money anytime. Sure, but the moment you try to move large sums or invest in something the bank doesn't like, watch the subtle nudges kick in. Transaction limits, suspicious activity flags, loan approvals that hinge on patterns you didn't even know existed. You are free as long as your behavior fits their algorithms. And it doesn't stop there. Banks can and do guide how you spend through the systems you rely on every day. Credit card rewards? They're carefully calibrated to make you buy things that circle money back to the bank. Loans? The interest structures are set not just to make profit, but to manage your behavior over years. Even the timing of your mortgage payments or automatic deductions subtly shape when you spend, save, and borrow. Let's talk numbers. The average American household carries nearly $6,500 in credit card debt. That's just one product. Banks design it so that you borrow more than you can comfortably pay off, generating interest profits that flow directly into the same institutions that hold your deposits. You're literally funding the bank's ability to shape the economy while thinking you're just keeping up with bills. It's even deeper. Banks are part of a larger network: central banks, interbank lending, credit markets. They control liquidity, the invisible bloodstream of the economy. When a bank tightens lending, suddenly your spending power evaporates, even if your account says you have money. When they expand credit, you feel richer, but mostly because the system is inflating the illusion of cash. Your freedom is a function of their choices. Here's the kicker. Most people celebrate technology for giving them financial freedom: apps, instant transfers, digital wallets. But banks often use these tools to collect even more data on spending habits, feeding algorithms that subtly prioritize profits over your freedom. Every personalized offer, every micro-targeted loan, every cashback incentive is part of a quiet system nudging you toward behaviors the bank wants. So what does that mean for you? It's not just about being careful with money. It's about understanding a system that quietly directs billions of decisions every day, often without anyone noticing. Your bank doesn't just hold your money. It borrows, lends, predicts, nudges, and constrains. You're free as long as your freedom doesn't conflict with the bank's objectives. And yet, this control is invisible. It's normal. It's legal. And it's been working this way for decades. Most people will never question it. They'll just keep swiping cards, taking loans, trusting the balance on their app. Meanwhile, the real power is quietly shifting, often in ways that affect the economy, wealth distribution, and even your ability to plan for the future. So, next time you think you're making a simple purchase, ask yourself, who really decided I could or should spend my money this way? The answer is more complicated than you think. And the truth isn't just about banks. It's about the system itself, and how much of your freedom is just a carefully managed illusion. Because here's the last part they don't tell you. The more the system grows, the more you unknowingly contribute to your own constraints, And the next time the economy shifts, the first thing you'll notice isn't a market crash. It'll be that the choices you thought were yours weren't. So who's really in control?